And the other big news coming from the US, their central bank or US Federal Reserve has slashed interest rates by 50 basis points, marking its first cut in over 4 years. The Fed announced in a statement that policymakers voted 11:1 in favor of lowering the US central bank's benchmark lending rate to between 4.75 and 5%. They also penciled in an additional half point of cuts before the end of this year and an added percentage point of cuts in 2025. This signals the start of an easing cycle. Starting from March 2022, the Fed had raised rates consecutively for 11 times to combat inflation not seen in 40 years. US stocks gained following the release of this statement and updated quarterly economic projections, while the US dollar fell against a basket of currencies. US Treasury yields also fell. And now we are joined by senior financial expert in India, Ajay Bagga. Welcome, sir, to the program. So, a larger than expected 50 basis points or half a percentage rate cut by the US Federal Reserve, with the Fed saying that this was meant to ensure a low unemployment rate now that inflation in the US is easing. How worrisome is the unemployment rate in the US?
Well, right now, not too much, and their own expectation is for the rate to be at about 4.4% for next year and the year after that. So not so worrisome. What they don't want is that till now they have engineered a soft landing of the US economy, whereby despite raising rates from 0 to 5.25%, the economy has kept growing. And this year it will grow at more than 2%. Next 2 years also, they are forecasting a growth of 2% plus. So they have managed a soft landing. They don't want to, put at risk that soft landing. So the interest rate cut was engineered at a double the rate than what was expected.
So key US stock indices first rose, but later lost ground to end in the red after the Fed's rate cut. How do you explain that, sir?
It was more, in the markets we say buy the rumor and sell the fact or sell the news. So markets were expecting that a 50 basis point rate cut would come in, and they first cheered when it came through, and then we saw profit booking coming in. But today, if you see the futures of what will happen tonight in the US markets, they are very strongly up. So all-time highs will be made on the Dow Jones and the S&P 500 today, tonight in the US markets. So it was more a sell the fact kind of thing, that once the news came through, it was confirmed, then profit booking came in. Nothing to worry as such.
Okay. Now, most key Asian markets, including in China and Japan, as well as in India, have all gained ground today following the US Fed's overnight rate cut. What do rate cuts by the US Fed mean for the Indian stock markets over the longer term?
See, very simply, when the rates are cut by the Fed, the US dollar tends to weaken. And since the investors are getting lesser rates in the American markets, they start putting money in emerging markets. So the flows to the emerging market increase. And as we have discussed earlier, India is now enjoying a share of 20 to 22% of emerging market flows. So India can expect heightened inflows from foreign investors. That's the number one thing that we will see, and that will strengthen our markets. All the emerging markets benefit from that. Today, if you look at Asia, most of the Asian currencies, from the Korean won to the Malaysian ringgit to the Indonesian rupiah, were up against the dollar, including the Indian rupee also was up against the dollar. So that's a function of more flows coming into the emerging markets. India will be a big beneficiary of these flows.
Thank you very much, Ajay Bagga, for joining in NewsNight and giving your perspective on the story.